Barclays President Bob Diamond's here, giving us his first interview following the release of those results to Bloomberg. He joins us live from Barclays in London's financial heart, Canary Wharf. Mr. Diamond, good morning. Thank you very much for joining us.
Good morning, Mark. How are you?
I'm very good, and you should be quite happy because the first half earnings beat results. Bob, can you just break down the second quarter for us? Because it's all very well saying the first half beat estimates, but we want to know how the last 3 months has fared.
And are you referring to the overall group or to
the overall group?
The
overall group first. We'll come to Bar Cap in a minute. So the overall group, can you break down the second quarter for us?
Well, we don't break out specifically first quarter and second quarter, as you know, Mark. We gave guidance at the end of the first quarter, but it was a solid quarter. I think clearly client flows slowed down in May and June. You saw that in most of the bank results. But if we look at the first half in total, given the environment we're in, to have an 8% increase in revenues across the entire Barclays Group is very pleasing.
I mean, bad loans has been a massive theme among banks, not just here in Europe and in the US. And to quote the company today, you say the impairment trend has been very positive. Can you elaborate on that? Are we through the worst? Will impairments continue to decline?
You know, it's very difficult, but I think, you know, we gave guidance as this year began that our impairments, our provisions, we expected to be down 15 to 20% on the year. And in the first half, they're down close to a third. So clearly, we're pleased with that trend. We had some areas that were more difficult than we expected. Spain would be an example of that. And we had some areas that were more benign than we probably had expected, and Barclays Capital would be an example of that.
Which areas worry you the most? I mean, you mentioned Spain, we know about Greece, but we're talking about Italy, we're talking about Ireland, we're talking about Portugal. Which countries maybe concern you the most when it comes to impairments?
Well, I don't think there's any one country that gives us concern. Certainly, we're very focused on Spain and Iberia, given what happened in the first half of the year. But if we step back and look at the second half, you know, some things have improved. So as client activity slowed down in May and June, we had uncertainty around a UK election. That's really been resolved in a very positive manner. There was a lot of uncertainty around Europe. And I think the impact, the result of the stress tests were positive for the markets in terms of more transparency, more confidence. We had a lot of uncertainty around U.S. financial regulation. And as that has gotten resolved, it looks like a good balance. You know, we're into implementation and execution. So as we go into the second half of the year, the second half of July has clearly seen a pickup in client flows, we think as a result of a bit more confidence based on the things that I was just talking about.
Because we're hearing about anecdotal evidence from other banks that the trading performance in the third quarter could actually be worse than the second quarter. Are you seeing signs of that, or is that just not the case so far?
Well, I think there's two ways that I would address that. One is, I think for the reasons I just said, our expectation, and we'll see how the quarter comes out, is that some of the issues that were causing a reduction in risk on the client side have been resolved. Again, U.S. financial regulation, the stress tests for the banks across Europe, a very positive result of the UK election. But there's still issues to be resolved. How's the G20 going to come to final decisions around the capital rules, the implementation dates, the implementation timetable? But we would expect, if you ask for my sense, probably a little bit better than the second quarter in terms of trading flows and client activity. But, you know, one of the things we feel good about is that in the tougher market environments, we should outperform. We have a very client-focused business model in Barclays Capital, less reliant on proprietary trading than some of our peers.
Well, can you tell us what percentage? I know Goldman Sachs, they report that proprietary trading accounts for about 10% of their revenues, which is more than the average. What about your proportion of revenues?
You know, it's hard to define, but it's single digits in our case, low single digits.
I mean, what are you going to do with proprietary trading, Bob? I mean, there's reports that Goldman is going to spin theirs off quickly because they don't want to lose their best players. Is that something you're considering? I mean, what are you going to do with the proprietary trading division? I mean, what's on the cards? What are you discussing about right now?
Very different model in Barclays Capital, and it's frankly, it's not an issue for us. I think, you know, one of the awards we won in the first half of this year was Greatest Flow House by Euromoney, based on full 2009. That's exactly the kind of recognition we want to get from our clients. Very client-focused, very little reliance on proprietary trading, so not a strategic part of our operations. We're very, very focused on putting our capital to work in our client businesses.
What about splitting the investment bank from the retail bank? I mean, does it make sense, Bob? Is it something you're contemplating right now?
I think you know exactly what I'll say to that. We are big proponents of the integrated universal banking model. We think it's best for clients, and I think you've seen an 8% increase in revenues in this kind of a market environment. We're doing more business with more clients in more countries every single day, even in these difficult market environments.
But just because you're a big fan of it doesn't mean that it might not happen. So are you planning for the eventuality when it might happen, when you might have to split the two?
It's not our expectation that that would be a result, that banks would be split up, no.
What about the outcome of the UK government's Banking Commission's examination into the structure of British banks? What do you think that outcome's actually going to be?
Well, you know, I think our aspirations are the same as the Chancellor. It should be fact-based, it should be unemotional, it should be thorough, and we will take part actively in exactly what they're planning to do, which is to look at the structure of banking and competition throughout the UK. We have no issue around a public debate in this space.
Bob, I mean, what a quarter it's been. Stress tests, concerns about sovereign debt, Basel III capital rules eventually watered down a bit. Are we over the worst, as in concerns for the banking sector? I mean, in a word, Bob, because we're running out of time.
Yeah, we feel pretty positive going forward. As I mentioned, Mark, there's still some challenges ahead, particularly around the final rules, but we feel good looking forward.
Bob.